Welcome. You're watching a fresh and new edition of Market Masterclass on Money 9, India's first multilingual platform for personal finance from TV9 News Network. I am Sakshi Batra, and joining in is a very special guest with me on this show. I'm joined by Mr. Hemang Jani, who's the head equity strategist at Motilal Oswal Financial Services. Thank you very much, Mr. Jani, for joining in, and it's a pleasure to have you with us. Help us understand, how are you looking at the markets right now? Are we done already penciling in the damage of the statewide lockdowns, the increasing cases, and the record numbers that we have been seeing, or could the situation in the markets worsen from here? Mr. Jani, can you hear me? Okay, we'll just try and get back to Mr. Jani. Once again, I think there's some kind of technical glitch that we are facing, but I'm sure that he'll be able to hear us soon. So I'll just try and connect back with him till the time he connects. We can just discuss about, what kind of market scenario has been seen. So in the last two trading sessions, we have seen that the markets have actually dipped quite a bit, and that is not just because of the domestic factors of COVID-19, but also because of the weak global cues that we have been facing. The US stock markets, coupled with the Asian stock markets, they have been dragging down on the concerns of inflation because of the rising commodity prices as well. So that has been something that has been of concern to the markets right now, coupled with, of course, the rising cases of COVID-19 and the increasing lockdowns, and the kind of impact that could definitely have on the economic recovery that we have been seeing. Of course, in the last one and a half weeks, we have seen several brokerage houses really come up and reduce some of their forecasts as far as the India's GDP is concerned. There is 1 to 2 percentage points of a decline that most of the brokerage houses are doing. We'll keep a watch on that as well. But as far as the leading high frequency data is concerned, talk about the industrial production levels. That has been something that we have been able to see a growth over there, 22% odd growth. On the other side, when you talk about the inflationary level as well, that has also slipped, that has eased a bit, about 4.5%. So on those macro factors also, we'll discuss with Mr. Jani as to what he really reads as far as the economic recovery is concerned with respect to the data that we are getting as well. I think we've got Mr. Jani back. Mr. Jani, if you can hear me, help us understand, first of all, how are you reading the markets and the current scenario currently, on the back of, on the one side, the rising COVID cases, the record numbers, the statewide lockdowns, and on the other hand, we've just got to see the latest macro data numbers, including IIP and inflation, and both of them have been at least more or less in line or better than expectation as well in some.
So, Sakshi, thanks for having me. What we feel is that our markets have been underperforming most of the global markets in the last 5 months. And if you see the performance of the market also, a large part of the rally in this calendar year has come from two sectors, metals and healthcare. Most of the other consumption-oriented sectors have really not performed. So we think that it is possible that you may see a bit of a pause in the market in terms of index performance, and till we get a clarity on two aspects. One is the COVID situation, how it pans out and how quickly we are able to move back to normalcy. Secondly, when do we see the earnings picture getting better? So these are the two factors that will decide the direction of the market from here on.
Absolutely, and very important point that has been made by you, that you do expect some kind of a pause or a range-bound trade, and that has been being witnessed also in the last 1 month, where the Nifty has been absolutely in a range-bound. I want to understand from you, apart from the kind of pause that you expect in the near term, how do you really expect markets to really pan out in this entire year, maybe next year as well? And what would you really advise investors at this point in time? How is it going to be possible for them to perhaps generate alpha at a time when the markets are subdued or range bound?
Perspective, we hope that this COVID situation would get back to a much better level over the next 2 or 3 months. And whatever earnings growth that we've had, let's say in the last financial year, which was about 13%, this year we think we should get to a earning growth of about 20%, though it would be a little early to take a final call on that, but clearly
Yeah.
things are definitely looking better. So, in this kind of a scenario, we think that if there is a correction in the market, then definitely investors could look at buying into certain themes and sectors where we have a very strong positive view from a 2 year perspective.
Right. Also, you did talk about earnings, so I have to ask you, so far in Q4 earnings, how have you really read the fine print, and what are the key takeaways for investors from here?
So, Sakshi, what has happened is that last 2 quarters we've had very strong growth and upgrades following the quarterly numbers. But this quarter, from whichever companies have announced the number, let's say 66 companies under our coverage have announced the numbers, and out of that, 42 companies have been downgraded, whereas only 24 companies have been upgraded. So the overall situation in terms of upgrades to downgrade is not that encouraging. So we'll have to really, watch out as to how soon we are able to see that growth visibility, and that would be an important factor for deciding the direction of the market.
Right. Now, you did say that, investors really now to need to actually focus on critical themes that perhaps you're also positive on. So I'll ask you some specific sectors and what's your view there. I want to first begin by understanding on financials. Do you believe that financials will remain vulnerable for some point in time till the time we have a clear indication that the economy is reviving? Should one really stick to some large cap, top tier names within this space if at all one needs to be here?
Absolutely, Sakshi. I think the top tier banks and even some of the NBFCs are the names where we would definitely be very comfortable. And I think given that they haven't really performed in terms of the market movement, this definitely provides a good entry point. And one thing which I would like to highlight here is that the smaller banks and the NBFCs, because of the current situation that we are in, that might be a little weak in terms of volatility risk, because we have seen
Okay.
that some banks have created some like NPL related developments were not positive, but overall we are quite positive on the financial space as such.
Okay, and what's your take on IT and pharma stocks? Do you see there is more room for growth from here on for investors who are already invested in this space?
Absolutely, Sakshi. I think healthcare is something that has done so well, right? This year, last year also, and we think that this is not just a COVID-related opportunity, but a structural story. So we would
Hmm.
definitely look at increasing our allocation to pharma and IT. We think that again, midcaps have done very well within IT.
Yeah.
So I think the large cap names should do much better, given that there is an underperformance in the overall deal wins, and the growth visibility over there is extremely encouraging.
Okay, and how are you reading the consumption plays post the earnings also, and amid the rise in this commodity prices that we have been witnessing for the last 2 or 3 odd months? How do you see this space completely panning out?
So consumption has taken a bit of a beating because of the raw material prices and because of the fears that if the slowdown persists for some more time, then there could be some impact in terms of growth. But overall, I think we have to just wait for maybe one more quarter to really judge the impact of this slowdown. But selectively, names like Maruti, some of the FMCG names like HUL, Asian Paints delivered good set of numbers. So these are the names where we would be absolutely comfortable buying into.
Okay, and I also have to ask you, in the last few sessions also we are seeing that mid caps and small caps are perhaps performing better even in downticks when we are seeing. Would you say is it time for investors to also look a little beyond large caps now to include a little bit more of mid caps and small caps in their portfolio?
I'm with you. This year from January till April, Nifty is up only 5%, whereas the mid cap index is up 16% and the small cap index is up 21%. And
Hmm.
many of the mid caps and the small cap companies, in terms of valuations, are quoting at a higher valuation than the large cap ones. So I think it's time that we look beyond large cap, mid cap, small cap. I think wherever there are companies and there are themes where there is a growth visibility, people do not mind, buying even at a little expensive valuations. So
Right.
we think that it makes more sense to have a, what you call agnostic approach rather than looking at only large cap, mid cap, small cap.
Okay. And in the end, we've spoken about a whole lot of sectors and you've shared your views on those particular sector. Say, for example, for investors who are looking to build a portfolio of diversified stocks in these segments that we've spoken of, any names that you would like to share with us that they can look at to start with at this point in time?
So, in terms of creating a new portfolio, which are the stocks that we would be comfortable buying into? So, we definitely think that some of the major banks like Axis Bank, ICICI Bank, State Bank of India. These are the names that one should definitely look at. In IT, we can look at names like Infosys and TCS. And in pharma, we like Divi's and Sun Pharma. So I think these are the three sectors where we have an extremely positive view. Also, selectively in the consumption space, Maruti looks like it is bottomed out, and from a 6 to 12 months perspective, things should look much better from where we are right now. So I think these are some of the known blue chip names that one can definitely get into from a portfolio perspective.
Okay, thank you very much, Mr. Jani, for sharing your views on the markets and these particular segments and the stocks that you've recommended to all the viewers who are looking at creating a fresh portfolio. These are the names that you can definitely consider. However, do speak to your financial advisor before taking a pick on any of the recommended stocks via experts who come on our channel as well. Thank you very much, Mr. Jani. It's been a pleasure speaking with you. And with that, we wrap up this edition of Market Masterclass for you, but a whole lot of action on personal finance front awaits you on the other side, so stay with us.